And then finally, let's just end with this, and then we'll start the practice problem. So, red flags, okay? There may be, and this is just a short list. This is just some examples, okay? And you'll, based on your industry, based on the company you're looking at, there's many of these. There's an infinite number of these, okay? Um, but the common ones, negative trend in revenue, okay? So if you see the revenues declining in your business, that's like a red flag. You got to be on the lookout for that, because at some point, if you have leverage, it's gonna cause you big problems. If you're not downsizing your expenses at the same rate that your revenue is declining, um, that's gonna lead to problems. So that's why companies lay people off and stuff, because oftentimes their revenues are declining, and they gotta just right size the business so that they're still profitable. If merchandise inventory is building up, so if you're a merchandising business, you see the inventory is getting higher and higher every quarter, that means they're not selling stuff. Okay, that's a problem. Okay, if the revenues are growing in line with the inventory buildup, that just means your business could be growing. But if your revenues are declining and your inventory is going up, you're probably in some trouble. Receivables also growing as a proportion of revenue or as a proportion on the balance sheet also means maybe you're not able to collect from your customers. You've extended credit to people who are not going to pay you. Okay. So all these things are like things that you need to find out more about. Earnings problems. So if you have losses, if margins are continually declining, these are all things that you need to look out for. Um, Cash flow. Okay. So you look at the cash flow from operations. This is from what we just covered last chapter. If you see that the cash flows are declining, um, that's also something to look out for. And then too much debt relative to the size of the balance sheet. So you'll see that in the debt to equity ratio, the coverage ratios, um, all the ratios related to current liability coverage. So you have to be paying attention to that. Okay, so these are just some. This is, at the end of the semester, I'm going to recommend some videos and some books to read. One of the books I will recommend is called Financial Shenanigans. And I think it's the best accounting book out there, because all it does, it's a 300 page book on all the common tricks that companies play in the financial statements. It's good for you at your level because you now understand something, hopefully, about financial statements and what these accounts are. So when you read that book, you'll now remember those stories of how these companies are manipulating financial statements. Okay, and I think that's actually the best way to learn financial accounting, is to see when things go wrong.